Mode now. Nimesh, a lot of brokerages, they are writing that the earnings growth is going to come. 2026 is going to be beautiful. And hopefully our portfolios as well feel like rock and roll. Tell us what you put in
Well, Nigel, I'm not too sure about the portfolio, but at the index level, at least there is a hope, ray of hope is what I'm going to say. And everybody's expecting 12 to 14% kind of returns. And I think that's largely because of earnings.
You're going to start by matching his step.
Down step.
Let me go this. So here's the outlook for 2026 as to what a lot of brokerages are saying. It's basically a ray of hope. After a disappointment in 25, there is a hope that maybe 26 will be a good year in terms of return. So I've just mapped across what the targets of a lot of brokerages have written. BofA is at 29,000, JPMorgan is at 30,000, Nomura is at 29,300. This essentially means a 12 to 13% return next year as far as Nifty is concerned. So that's the Nifty target across most of the brokerages. Now, again, the whole thesis of they turning bullish is basically the revival of earnings. So what is going to drive the optimism? BofA says that the upside in the earnings is going to let the markets rally. And basically, they believe that the earnings cut, the Nifty earnings cut is largely behind and growth should accelerate from here on. In fact, while all this, they are not expecting too much of valuation expansion. So whatever rally has to come has to be backed by earnings. Now, similar is a view from JPMorgan as well. Even they're expecting the MSCI India earnings to be 13% in calendar year 26 and nearly 14% in calendar year 27. So again, the whole thesis of this rally is going to be backed by earnings. Macquarie believes that most of the market is coming out of hibernation. The outperformance is again going to be backed by earnings growth and revival in growth as well. So that's been the key trigger as to what even Macquarie believes. The recovery in consumption spends and resumption of FI flows could further add to the upside in next year. So that's the view there. Nomura also has a target of 29,300 on the Nifty for next year, and they believe that there is while the macros are sanguine, they remain very selective. It's a good advice from Macquarie that they are advising suggesting investors not to get carried away and buy into richly valued narrative stocks. So that's a good advice as far as Nomura is concerned. Now, what are they betting on in terms of sector bets? BofA is basically betting on more of large caps over mid caps and small caps. And within these sectors, they are overweight on rate sensitives as well as in consumption, but they are very, very careful and underweight on capex play. So that's a contra view on capex from BofA Securities. So that's a view there. Now, JPMorgan also has a sector bet. They are overweight on materials, financials, consumer discretionary, as well as consumer staples. Hospitals also they like, and so is real estate. But they have a bit of underweight as well in some sectors, which I think includes some, again, the capex plays is what even JPMorgan seems to be not very bullish on. So, okay, they're negative on IT as well as on pharma as far as JPMorgan's underweights are concerned as sector bets for next year. Similar is a call from Macquarie as well. Okay, they've put out the big sectors or the big stocks to bet on. These are the big picks from Macquarie for 2026. They've classified into three buckets. The first bucket is the 6 core stars, which includes HDFC Bank, TCS, Reliance, M&M, Divi's and Jindal Stainless. They have a tactical plays, which includes Adani Port, Shriram Finance, ITC Hotels, Titan, Havells, those kind of names. And they have 5 or 6 rising stars, which includes Tata Communications, Make My Trip, Lemon Tree, Delivery, as well as AB Capital. AB Capital has done well as well. So these are the few stocks that Macquarie is betting on for 2026. So that's a call there. What is Nomura betting on? Again, they are largely bullish on financials, pharma, IT, manufacturing, telecom, cement. These are the few sectors which Nomura is betting on. In fact, Nomura has put out the top 20 ideas for 2026, and that includes a lot of large cap names. They're neutral on within sectors. They're neutral on auto, oil and gas, and metals. But I'll more focus on the 20 stocks that Nomura is betting on for next year. They're cautious on some sectors like infra and healthcare, which has been and capital goods as well, which has been a trend for a lot of them. Now, this is a list of 20 stocks that Nomura is betting on for 2026. All the large cap names are part of the list. ICICI Bank, Infosys, Axis Bank, CG Power, LG Electronics. Swiggy is an interesting name in this list. So is Ashok Leyland, Dixon Technologies. Aditya Birla Real Estate is one name in the real estate pack that they're bullish on. And MedPlus is a mid-cap company that they're bullish on. So this is a list of 20 stocks as far as Nomura is concerned. The bottom line is, next year, there is a ray of hope that markets can give 12 to 14% return, but that's going to be backed by earnings. So the large part of the focus seems to be on the large caps and where the earnings are going to be. Is that a view for you as well, that back on companies which are going to throw up the earnings?